Imagine you woke up one day to find out your bank account has just been wiped out. Your entire life savings have been evaporated, but not because some anonymous fraudster has stolen it. It happened because the very banking institution the regulators told you was unquestionably strong has failed. The bank has taken your deposit and converted it into shares to ensure its own survival. You now own those shares, but you've taken up more risk than you signed up for, and there's no promise that those shares won't become absolutely worthless. With the global markets in turmoil right now, this scenario is becoming more and more likely, and this is called bank bailing in your money. If you think this is illegal, impossible, or will never happen, think again. This has happened in Cyprus, the IMF, the International Monetary Fund, the BIS, the Bank of International Settlements, has all passed legislation to make this completely legal. So everyone, it is time to wake up and realize that your money is not safe in the bank. And in today's video, I'm going to expose these new banking laws, and I'm also going to expose how there's more and more pressure coming from the IMF, coming from the BIS. They're telling the banks to prepare now, and they're giving more creative ways for the banks to steal your money. So everyone, this is a very important video, so let's not waste any time. Let's get straight into it. Now again, you may think this is impossible, or you may think this has never happened before, but people, this has actually happened before, but just slightly different. Listen to this. Executive Order 6102 required all persons to deliver on or before May 1, 1933, all but a small amount of gold coin, gold bullion, and gold certificates owned by them to the Federal Reserve in exchange for $20, equivalent to $413 in 2020 per ounce. So while this is a bit different with gold confiscations in 1933, again, what happened around that time? The Great Depression. Now, what a lot of people did back then, instead of saving cash in the bank, they hoarded gold. But today, not many people own gold, they only hold cash. So the banks aren't going to be able to do another gold confiscation. This time, they're going to have to go for your hard-earned money, and then they're going to convert that into worthless shares. And you know how the old saying goes, all it takes is for one generation to pass away to forget most things from history. And now with over 90 years since the last Great Depression, most of that generation has passed away, and people think everything's euphoric, stocks only go up, there's so much money in the system, no bad times are coming, there's no need to prepare. Well everyone, we're going to go a lot deeper, and I'm going to show you exactly this legislation and how dangerous it is. Because listen to this. Congress passed the Dodd-Frank Wall Street Reform and Consumer Act of January 2010, which eliminated the option of bank bailouts but opened the door for bank bail-ins. So you know how ridiculous that is? People were outraged from the bailouts in 2008. So the government's like, okay, look, you're outraged from us wasting your taxpayer money. So you know what? We've got a better idea. We'll just take your money out of your bank account instead. Problem, reaction, solution. And for those quite not sure what a bail-in is, a bail-in helps a financial institution on the brink of failure by requiring the cancellation of debts owed to creditors and depositors. Bail-ins have been considered across the globe to help mitigate the burden on taxpayers as a result of bank bailouts. So again, people, their excuse for this legislation is completely ridiculous. They're saying, look, we don't want to hurt the taxpayers, so what we're going to do is just take the average American, average Australian, European's money instead. But people, I'm sure you already know about these bank bail-in laws, but there's a new development. There's more and more pressure on the banks right now from the Bank of International Settlements, the BIS. This is like the central bank for the central banks. And remember, these are not federal organizations. Nobody elected these people. These are private institutions. Listen to this. The Bank of International Settlements, BIS, has also spoken openly about how bail-ins can be used with a focus on integrations in the European Union. In these scenarios, bail-ins can be used in cases wherein a full government bailout is unlikely. What's going on, everyone? I thought this was just some crazy conspiracy theory. Well, they're not trying to hide it anymore. They're becoming more and more open about their plan, probably because what's going to happen is people won't be able to take out their money from their bank account even if they want to during the next crisis. And I guess this is why they're also really pushing for CBDCs, central bank digital currencies, because then you won't even be able to take the money out of your bank account if you wanted to. But here's something I keep hearing. People are saying, well, look, don't worry because my deposit is covered under FDIC insurance, all the way up to $250,000, so I have nothing to worry about. Well, did you ever ask the question, how much money does the FDIC actually have? And did you also ask the question, how much deposits are there in the US? Well, let's find out the answer. Listen to this. The FDIC and its reserves are not funded by public funds. member banks' insurance dues are the FDIC's primary source of funding. The FDIC also has a US $100 billion line of credit with the United States Department of Treasury. So people, they only have a line of credit of $100 billion with the Department of the US Treasury. And they probably also only have about $50 to $100 billion worth of their revenue from this insurance. But let's have a look how much deposits there actually are in the US banking system. Look at this, everyone. There is actually $18 trillion worth of deposits. So I'm no mathematician, but if they've only got 100 to 150 to 200 billion and it's $18 trillion worth of deposits in the banks, even if only one of the major banks goes down and they have to cover, say, 10% of all deposits of 1.8 trillion, that's still more than 10 times the amount the FDIC insurance actually has to cover. And you know what this reminds me of and gives me a bit of deja vu? The subprime mortgage crisis. Remember AIG? They were the insurer for these junk mortgages that were sold as investment grade. And banks were saying, look, don't worry, these are insured. There's nothing to worry about. Well, what actually happened when it collapsed? The insurer went bust. So what this should be is a wake-up call for you to say, guess what? The FDIC, the insurer, doesn't have enough money to cover all these deposits if we have a full-on banking crisis. All it is there for is to boost confidence in the banking system, because that's all it relies on. Confidence. And for every dollar you deposit at the bank lends it out 10 times. So if all of a sudden overnight people went to get all their money out of the bank, guess what? It's not going to be there. But over the past 14 years since 2008, the banks have been very lucky because we've had nothing but an economic boom. But what we're now seeing in the markets is we're starting to see a lot of fear in the markets. We're starting to see people sell off assets. We're starting to see people lose faith in the banks. We're starting to see bank runs overseas. We're starting to see assets frozen. And the reason why I'm making this video now, because it's time to prepare now before it's too late. There's no point of me making a video after a bank has already gone down and said, look guys, you know what? It's too late, your money's gone. I'd rather be prepared 10 years too early than one day too late. So it is time to prepare right now and find some alternative ways to store your wealth. Now, this is not financial advice, but what I'm personally doing is I'm diversifying my bank accounts. I'm also putting money in credit unions. I'm also storing my wealth in gold, because not only will gold boom during a banking crisis because there'll be a lot of fear, when there's a lot of fear, uncertainty, people rush to safe havens, it will also protect my wealth. And if you physically own that wealth in your hand, it is not the bank, it is yours. It's always good to have a bit of physical cash on hand as well, because we've seen what happens during crises is banks go offline, the ATMs stop working, or the online banking apps go offline as well. And again, what you're probably going to think, oh, you know what, Michael, you're just a crazy prepper. Why are you doing this? But again, people, we're seeing what's happened time and time again. People don't prepare until it's too late, and then they'll wish they prepared. Kind of like car insurance. You hope you never crash your car, but you buy insurance just in case. So what I'm also doing during a banking crisis is, just in case I can't get goods, I'm storing up things like fuel, because fuel prices are skyrocketing. So luckily, before all this surge in oil price, I've been stockpiling fuel at my home so I can get ahead of this inflation. I'm also storing food, because food costs are also going to continue to skyrocket. Food costs just hit an all-time high. And I'm also storing water as well. Because think of it like this, a lot of people invest in the markets to get a 10-15% return. But if you can buy items you may need in the future now and save 15%, well, then that's a 15% return on your money. And some of these prepper items people have been buying have been skyrocketing in value. They're getting much better returns than in the S&P 500 right now. So everyone, I hope this video woke you up to see the risk of storing your money in the bank right now. Again, I'm not saying there's going to be a banking crisis tomorrow, next month, next year. Nobody can time it exactly, but it's better to prepare now before the crisis begins, because when it does, it'll be too late. And I didn't just want to rant about it. I wanted to show you real hard proof, facts, and data. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.